Hello guys, welcome back with me. Don't forget to like, comment, share, and subscribe. China's property sector contracts further with prices sales falling. Beijing returns China's property sector contracted futures in August, with falls in home prices, investment, and sales. Official data showed on Friday as a mortgage boycott, widespread COVID lockdowns, and a weak economy clouded confidence in the sector. One key driver of economic growth, China's property market has surged from crisis to crisis since the summer of 2020 after regulators stepped in to cut excess leverage at developers. The property market was the second largest economy, which narrowly escaped a contraction in the second quarter. New home prices fell 0.3% month-over-month in August, the fastest pace since November 2021, according to Reuters calculation based on National Bureau of Statistics or NBS data. Prices were unchanged in July. New home prices fell 1.3% year-on-year in August, the fastest pace since August 2015, extending a 0.9% decline in July. Property investment fell 7.4% year-on-year in January-August, the fastest pace since January-March 2020, extending a 6.4% decline in January-July, according to NBS separate statement on Friday. Property sales by floor area fell 23.0% from a year earlier in the first 8 months of the year, after a 23.1% slump in the first 7 months, reflecting further fragile demand. Confidence has also been dampened by the mortgage boycott across the country since last June, as developers stopped building pre-sold housing projects due to strapped liquidity and strict COVID restrictions. As of Tuesday, 51 cities, accounting for 26.1% of China's gross domestic product or GDP, were implementing full of partial lockdowns or some kind of district-based control measures, said Nomura in a research note. Authorities have taken steps to prop up the sector, including relaxations on home purchases, smaller down payments, cuts in mortgage interest rates, and a bigger reduction in the selling price of homes. Both in China's residential property market are expected to depend this year, with economists now expecting homes prices to fall in 2022 and betting on faster drop in property sales than previously forecast, a Reuters poll showed recently. Japan signals readiness to act in FX market as sharp yen volatility persists. Tokyo Reuters, Japan's finance minister Shinichi Suzuki said on Friday he would not rule out any options in taking action in the foreign exchange market if sharp weakening in the yen persisted. Suzuki told reporters at the ministry that he was concerned about the recent rapid and one-sided weakening in the yen, which hit a 24-year low against the dollar earlier this month. If such move persists, the authorities would take necessary action without ruling out any options, he said. Australia's central bank says closer to normalizing rates hints at 2.5 until 3.5% range. Sydney Reuters, Australia's top central banker on Friday said interest rates are closer to normalization after a successive run of outside hikes, although he warned rates are still low, hitting a range of 2.5% until 3.5% would be appropriate depending on economic cycle. Appearing before a parliamentary economics committee, Reserve Bank of Australia or RBA Governor Philip Lowe pledged more interest rate rises are required to bring inflation back to the bank's 2% until 3% target range, but said it would it would be appropriate to slow the rate of increase at some point. At some point, we will obviously not be increasing rates by 50 basis points and each meeting, and we're getting closer to that point, Lau told in Parliamentary Economists Committee. I think that's all from me. Don't forget to like, comment, share, and subscribe.